It's Master Sunday, and Bitcoin is crashing. Bitcoin erased its gains above 70K faster than Rory McIlroy's 6-stroke lead heading into moving Saturday. And it crashed on the news that the United States didn't reach a deal with Iran. Tensions in the Middle East are hotter than Cam and Sam burning up the core shooting 65s yesterday. Is the market anticipating retaliation from Iran now that Saudi Arabia has gotten the East-West pipeline back online? One thing is for certain, like Tiger's former caddy, Mike Cowan, reading the wind with a cigarette, there's analysts predicting that the winds are shifting with Bitcoin. In this episode, we cover the charts, conversations, and data that show that now is a generational opportunity for buying Bitcoin. And the ETF data may be the canary in the coal mine. One thing is for certain, despite the headwinds, the whales are encouraging us to press on and to think bigger. We've got a lot to cover today. This is Dante Cook with Bitcoin Simply on Master Sunday. Let's go. What's up, everybody? For all the women that watched the show today, let me give you a tip. If your husband doesn't respond to you today, it's because they're locked into the Masters with that Chi Rodriguez, Carl Howard energy from 1975. You're asking us to cut the grass when we're watching reruns of Happy Gilmore and The Legend of Bagger Vance over and over again. I'm sorry, I can't hear you. The massive roar from the crowd on 17 after somebody sunk a massive putt to win the Masters was blocking you out. Every man desires to have not only the approach game, but the facial hair of somebody like Cam Young, who I think is going to win today. It would also be cool if Rory didn't choke and held on, because I love seeing dudes with loyalty and integrity win it all. Rory's one of the good guys. But speaking of choking, the choke on the Strait of Hormuz might be coming to an end. And that's because Saudi Arabia got its East-West pipeline back online. And that should be good for markets, but the market is sensing more conflict. Well, not the whole market. Only Bitcoin, because it's the only asset that trades 24/7 and gives us a true barometer on what the market is actually feeling. And Bitcoin is crashing because I believe the market thinks there's going to be more conflict because JD Vance and Iran didn't reach a deal. But Bitcoin whales, they're locked in. They understand that now is a generational opportunity to buy Bitcoin. Listen to this analysis from Jordi Visser and Anthony Pompliano.
Over 100% of all of the Bitcoin returns since its launch in 2010, but also if you break it down by 5-year increments, in every 5-year increment, the best time to invest in Bitcoin where you get over 100% of the returns is when the Fed is either on hold or cutting, combined with negative real yields. Now, remember, the first part of 2010 to 2019, we had QE going on. We had fairly, moderate inflation, but if you have zero yields or 3-month bills around zero yields, you're obviously going to get huge returns. So that's what this is about. But I also said this is from 2019 to 25. This is from 15 to 19, and this is from 10 to 15. It doesn't really matter. It's all the same. This is the point that you want to be looking at it, because when we get to the next CPI number, I think what's rolling off is a 0.1, meaning last year, the month to month was about 0.1. We'll be replacing that again with something close to 1, which means headline CPI will be above the 3-month rate as of next month. So there's your catalyst. We'll be entering the regime, if you want to call it, of the Fed on hold or easing with inflation up above yields, so negative real yields. But one more thing on the technical side, the weekly MACD is crossing this week. So when you put it all together, I've started again. I tried to buy when we were up close to 100. I was buying some above 100. I am reducing a little bit of some of my memory names, and I'm taking that money, moving it in. But I'm also moving money out of money markets now, moving it into Bitcoin, because I think we've hit a point where you're going to start to see a break in correlation, and I think people are going to start to focus on it as a scarcity asset. And just one more thing.
This upcoming inflation print is going to be higher than people think and they expect. And it will be persistent even if tensions die down. With the new Fed chair coming in, inflation is going to be high, higher than you could actually earn in markets with treasury yields. So if you're a new Fed chair with Donald Trump as the president, do you want to have a scenario with declining growth and high inflation or increasing growth and high inflation? I think you all know what this administration thinks. And the organization that's going to benefit the most from this is MicroStrategy. It's because they've been buying Bitcoin like it's going out of style or out of supply, which it is. Michael Saylor just encouraged us to think bigger on Master Sunday. Now their Bitcoin stack is up to 55 billion. And while the world is panicking, Stretch is upending markets, giving investors 11.5% dividend return with no volatility. Their product had 1 cent of volatility on Friday, and it gained 526 million in liquidity just to buy Bitcoin. Their equity has more liquidity as a percentage of their market cap than all of Mag 7. People don't understand how big of a phenomenon this is in markets. Saylor has said time and time again that he understands that Bitcoin is an asset that the world needs, no one can stop, and few people understand.
The best idea, if you want to make 10x your money, is you buy something that everybody in the world needs, nobody in the world can stop, and almost nobody understands.
Perfect.
Okay, so in 2010, that was Amazon, or that was Apple, or that was Facebook, or Google. These are all dominant digital networks that everybody in the world needed that nobody could stop. But if you'd ask the typical mainstream investor, is this a good investment? They would all say, oh, it's very scary, it's overvalued, Amazon doesn't make money, mobile phones used to cost $50. It's like Apple's going to sell an iPhone for $600. They said it's too expensive. The iPhone, $600 is too expensive. Nokia will sell me one for $30. They said Apple's going to go to $30. And of course, what happened is Apple went to $1,500. Yes. And so the conventional wisdom was against these big tech companies.
In 2009, the world didn't understand that they were shifting from on-prem to cloud computing. They also didn't understand that computers were shifting from CPU to GPU, or NVIDIA. They didn't understand that the world was moving from gas-powered vehicles to electric vehicles. They also didn't understand that the world was moving from BlackBerry to iPhones, or a computer in your pocket. But you know who did spot this? Chris Camillo, a guy who turned $20K into $70 million. This is a fascinating clip between him and the Bitcoiner Mark Moss about what he saw in 2009 and why he invested heavily into these assets.
70 wins over 18 years, I think is what I kind of counted, 70 big wins. Some of them...
Which actually sounds kind of like a low number over such a long period of time. It is.
It's just a handful of high conviction trades every year that really matter. I mean, some of them are like, listen, you identify something like cloud computing in the early days, right? I was a technology founder. So I was building technology companies. And in the earliest days of AWS, we were using AWS at one of my companies. And my business partner told me this is going to absolutely change the entire technology world.
Yeah.
And we were monitoring the mention frequency of the word cloud computing in AWS on technology forums like on Reddit and other places. And we were seeing a massive acceleration in engineers having conversations around potentially migrating their company to the cloud, primarily through AWS. So made a major investment in Amazon, right? And that was already like one of the world's biggest companies. So it doesn't have to be something really niche and small. Sometimes it's something really big.
Yeah.
If you go all the way back to my earliest days, investing, even a company like Apple, the earliest days of the iPhone, people in New York, which is where most of Wall Street was at the time, weren't able to really use the iPhone in year one because it only came on AT&T. And AT&T had terrible data coverage in Manhattan. So basically nobody owned an iPhone in Manhattan year one for the most part.
Yeah.
And if you're an institutional investor, it didn't really seem like they were getting the traction that they were because your friends, your colleagues generally weren't using iPhones for that reason.
And BlackBerry dominated the business landscape.
It's still done. So there were a lot of factors, correct. So there was an opportunity to arb what other people weren't seeing. Same thing with Tesla. If you didn't actually drive a Tesla in the mid to late 2010s, you probably didn't fully grasp the magic that was part of the EV movement. And you didn't really understand how big and fast that movement was coming, right? And you just had to experience it. So these are all like arb opportunities because you were able to see something or experience something sooner than someone else.
Well, if you understand where those assets were in 2009 and 2010, you understand exactly where we are with Bitcoin. It's something that is truly unstoppable that the majority of the world doesn't understand quite yet, unless you're following channels like these. And unless you're following channels like these, You're going to be one of the many people who have Bitcoin who don't know what they actually own, so that you sell it way too early. But if you do follow this channel and the sponsors that we have on this channel like Ledn, well, you're not going to sell your Bitcoin. You're going to borrow against it with no capital gains and no taxes. You're going to borrow from an asset class that's going up faster than the 11 or 12% interest rate that you can get with Ledn, that you can repay any time. You can borrow up to 50% of the value of your Bitcoin and repay it at any point in time. Fiat gets in your account in just 6 hours and your money isn't rehypothecated. They don't do any other crypto or any other shenanigans, and they don't lend out your Bitcoin. Just pure institutional Bitcoin lending for you as an individual. Fill out an application and get started by using the information in the link down below. The other thing that the rest of the world doesn't understand yet is that Bitcoin is an asset that you can actually truly own, and you can be your own bank. You don't have to outsource it to JP Morgan and Morgan Stanley and Chase and all of the other big players. You can do this on your own, in your own bedroom, in the closet of your own house. But how do you do it? Well, don't do it alone. Get a coach from the Bitcoin Way. A member of their team will walk you through how you and your family can become sovereign so that when stuff hits the fan, you ain't catching all the smoke like everybody else. You're going to be secure holding your own Bitcoin keys. Go to thebitcoinway.com/partner/Dante-Cook, and the team will specifically hook you up with special advice.
Have always had one thesis on crypto and Bitcoin specifically, and it has not changed.
Crypto specifically or Bitcoin specifically?
I would say, well, just Bitcoin.
Okay.
To simplify it.
Yeah.
I've had the same thesis for about 10 years. It hasn't changed. I'm not sure it ever will change. And the thesis is I don't have a strong viewpoint on Bitcoin personally. And I don't think that it matters that I don't have a strong viewpoint, because what matters is what other people think about Bitcoin. Now, you obviously have a big thesis on Bitcoin. I don't need to believe in your thesis. All I need to believe is that you have a thesis.
Okay.
And it's very clear to me that this next generation of investors have a massive appetite for crypto, Bitcoin specifically, right? They all have different reasons for that, and I don't care what their reasons are. But I am convinced that for every gold bug of my generation and my parents' generation, that there are 100 to 1,000x more investors in the younger generation that feel that way about Bitcoin for one reason or another.
Yeah.
And if that is ground truth, then I want to be exposed to Bitcoin, because it's this generational trade where as the asset becomes institutionalized and becomes accepted and normalized, which it has been over the past few years, you can now so easily invest in it. As this wealth transfer takes place over the next 20 to 25 years, tens and tens of trillions of dollars, the new generation is likely to allocate some piece of that capital to something like Bitcoin.
Yeah.
And so that's the only thesis that matters. Because of that, I have exposure.
Yeah.
I want exposure in it because I feel like that's a really solid thesis.
Yeah.
And I don't spend any time thinking about Bitcoin or crypto.
This conversation between Mark Moss and Chris is actually really powerful, because he talks about Bitcoin being the asset of the future. He says that people in 20 years will look at Bitcoin just like people looked at gold and the gold bugs and the boomers and our parents 20 years ago. The new generation is going to own an allocation of Bitcoin in their portfolios. Are you prepared? He invested in generational shift opportunities like Amazon, like Nvidia, like Apple, and now like Bitcoin. And beyond just the generational trade opportunities, this chart shows one important thing. Bitcoin has always been heavily correlated with stocks, meaning that as stocks go, so does Bitcoin. But over the last several months, we've shown a break in this correlation. And this is incredibly important because the market is devaluing software stocks and private equity and private credit because AI is disrupting them all. But Bitcoin is the only software asset that is not tethered to the real world that will not be disrupted by AI. Because it's decentralized, there's no owner, and it's the only asset that is unique in its structure and its design. This is why Bitcoin survives the AI crisis. Another data point that's incredibly important. As of just a month ago, ETFs were showing negative outflows for the year. But just a few weeks ago, something started to happen. They all started to turn green. The only ones that are still red in year-to-date flows are ARK from Cathie Wood, GBTC, one of the giants, and FBTC, which is Fidelity. Their advisors were helping their clients tax loss harvest their Bitcoin, and now they're finding opportunities in the next quarter based on regulations and guidelines to get back into Bitcoin. And that's why these flows are shifting. And that's why I believe that we're going to see a break above 70K and it's going to be persistent. So on Master Sunday, don't get bitten by the short-term alligators that think short-term. Your Bitcoin stack will come up short-handed like Chubbs Peterson. Keep a long-term perspective and keep your other eye on the ball. If you aren't a Happy Gilmore fan, you don't understand what I'm talking about, but that's okay. It'll be exciting what happens on hole 18 on Master Sunday. It always is. Rest in peace to Carl Weathers, Chubbs, and to Morris, our favorite alligator. Rest in peace on this beautiful Master Sunday. This is Dante Cook with Bitcoin Simply. Happy stacking. And if you haven't already done so, subscribe to the channel. We bring fire 7 days a week. And if you haven't already diversified beyond just buying spot Bitcoin, well, you should get into Bitcoin miners. One of the things with Bitcoin mining that protects you is your investment into hardware. If Bitcoin runs up or goes down, your machine still actually has value. But you don't have to worry about all that. You just send a check to SAS Mining. They'll help you find the right machine, they'll host it, they'll repair it, and they send sats directly to your wallet. Get started beyond just buying spot Bitcoin by getting into Bitcoin mining. Use the QR code to get started. Happy stacking and happy Sunday.